A very good morning to everyone. How you doing today on a Friday, November 19th? No, it's not the 19th. What's this? I didn't change the date somehow. Well, it is now December 3rd, actually, so disregard the date on top. This is the TriggerCharts pre-market rundown. Thank you so much for joining me. We have a lot to talk about because over the last couple of weeks, and last week, yes, we did not have a morning meeting. Sorry about that. But, of course, it was holiday shortened day. Interesting day, nonetheless, last week as we saw markets crater, absolutely get obliterated by the idea that there is a significant amount of potential for disruption, shall we call it, due to this latest bout with the COVID variant. In the chat, I put a note there, and it is about the 4-hour Traders Playbook Advanced Coaching Session, and that is normally $199. But if you do subscribe, you're a new subscriber to the Commander Series, which we're going to go over. You'll see right here, the Commander Series is a suite of really cool applications that give you all sorts of information about markets, as well as helps you provide a high confidence level trade with biases on any time frame. One of the only, if not the only, overall any developer out there on TradeStation, we're the only ones that have a multi-time frame on one particular row. So you can pop in a symbol, any symbol you want. Let's just do the old apple and click that, and relatively quickly you're going to get charts across all the way that tells you, okay, on a weekly basis, or whatever you program this to be, weekly, long 2 bars, 2 weeks in the long side, 3 on the daily, et cetera, et cetera. And that matches up. In fact, if we go here, you can see that the daily, which is the chart down below here, is 3. We count 1, 2, 3. The yellow bar is the signal bar, which basically gives us if you hover over it, gives you right there, the long entry levels, and it gives you an alert that something's going on, that you need to kind of change up your position or think about moving to a different level, in or out, short or long. So that's all there. Now, with that in mind, I'm going to mention to you, because it's important to do so, that, of course, investing involves substantial risk, and past performance is not a guarantee or indication of future results, and a loss of original capital can occur. Please consider what we're doing today and talking about each and every Friday only for educational purposes only. And as always, listen, let's be safe. When we're crossing the road, let's look both ways. Use your best judgment when investing. So maybe we can go right there so we don't have to see that date anymore. December 3rd. All right, here we go. What is the big theme of the week, or maybe of the 2 weeks? Probably one of the things should be in there is volatility. Clearly, volatility has been really incredible. Just think about what happened yesterday. NASDAQ hunting down into the negative territory, down about 100 points, finished up dramatically. The Dow up 750 points at one point yesterday, finishing up about 520 or so. But yet, you can even watch, as we're talking today, watch their futures on the top line here. You'll see some big movement this morning on the jobs number, the fact that we're getting into the end of the year, the situations with regard to the other themes, which is a confluence of matters. What we're seeing right now is something we see oftentimes at the end of the month and the quarter, definitely at the end of the year, sometimes at the end of a week, but they multiply and they become much more significant as we are going into the end of the year, especially with a year like we've had now, with things that are coming to fore that are really interesting. So now, here we are in the end of the year after a really good year for all indices. We're seeing that all of a sudden, this confluence of information, the Fed share, changed in their tune, striking the transitory word when they are referring to inflation. Duh. I mean, come on. I mean, seriously? We all knew that. Listen, we've talked about this how many times on Fridays, this bogus transitory nature of inflation. However, what's really fascinating about that, as much as we do see this as I don't want to call it permanent, but as a real situation, not just a 1 or 2 month wonder, but maybe 6 months to a year at least of seeing significant amounts of inflation. What we're finding is, interestingly enough, we're not seeing a lot of movement in bond yields. Yeah, we did see that the 10-year did tick up to about 1.7% last week. And then as soon as that happened, voila, out of nowhere, we get this Omicron variant that comes in. So we saw that inflation's kicking up. Problem is that really the Fed said, yeah, we are thinking about possibly looking into maybe, I don't know, we'll see what happens depending on conditions. And of course, according to our risk parameters, we are going to think about slowing down the pace of buys, or said another way, reducing the amount of buys that we do of bonds in our quantitative easing program. Now, what's really kind of interesting about that is that once that happened, there was this kind of slow move up on bonds, but it couldn't be sustained. One of the big reasons is that our bonds are yielding a lot more than other bonds around the world. You look at Japan at negative yields. You look at Europe at negative yields. That means that for the most part, you'll have to pay to give away those bonds. So what you do is you do an arbitrage or just simply buy the bonds of the U.S. and you get a positive, albeit a very small number, but a positive return in terms of yield on your investments and the guarantee by the full faith and credit of the United States for whatever that's worth. Now, one of the things that happens here is we have to consider the fact that, when interest rates are low, when the Fed is in absolute dovish mode, when they are lowering rates and buying bonds and talking up all this going on, what happens? Usually we see that markets react favorably. Well, now what's happening is you got to think about the other side of this. What we talked about, I think I mentioned this, and I may have mentioned it on one of my podcasts also, this sinkhole concept, thin ice. Think about a sinkhole in the street, right? Your cars are driving across it. Everything is fine. Everything's going along just great. And then what happens is there's some undercurrents. There's some kind of maybe a river running underneath the street, but yet the street holds up pretty well until one day. It's just too much. Just too much. And we see a significant move that all of a sudden creates a little crack, then a break, and then the whole thing just falls in. That's kind of like what we saw over the last few weeks. In particular, I mentioned this because you saw that the breadth. We talked about, for example, the KRI. The KRI indicator started kind of rolling over a little bit, even though we're making kind of new highs over here, not really getting a really good push on the KRI after we had multiple clusters. And that was a warning I was telling everybody about. Hey, pay attention to this. We're going to see something happen. Now, it did drop. And then, of course, in this market condition with all the liquidity out there, there was immediate buy-in back and almost to I think we got to an all-time high right there. Then rolled down very significantly. But really, the big issue there was that we started to see things like, for example, the advanced decline line. It was declining, more decliners than advancers, even in up markets. That was just a little strange. Then we saw things like this. The McClellan oscillator starting to tick lower, and right about here got to the zero line. And then you saw a major divergence, right? We saw the markets move up very nicely, and that was kind of cool. So we saw this kind of this move right here. And then, but yet we saw this, the move down. A divergence is what we saw right here. Now, when you see that, when you see, like, for example, the advanced decliner starting to go like this and markets going like this, what does that tell you? That there is a very small subset of companies that are really leading the charge there. That was interesting. Then you have kind of the spearman not able to get to a new high again, and then also start rolling over right about here. Oop, that's not good. Right about here. Let's get this semi-straight. Same situation where really we're starting to see a divergence lower. Spearman at a negative 86 closed yesterday, and right here was about negative 300 and something. That was definitely an oversold indication by any standard. And when you look and you see at the same time that there is a move in the KRI that we see still weak, we need to see this kind of roll up a little bit here to gain our strength back. Probably another indicator you can look at, which is the aileron. Let's push this on SPY for a second. Aileron kind of starting to roll over right about here. Right, starting to roll. It's only been, listen, this has only been 4 or 5 days. 1, 2, 3, 4, 5, 6 days that the market's really starting to hurt. So it's not like, everybody's freaking out. Oh my God, the market's terrible. It's 5 days. We're only a few percent below the all-time high, 470 down to 450. That's 20 points. That's what, 4%? 3.5%? Not the biggest deal. It doesn't feel good, though, when a lot of stocks are getting hammered. I get it. We're going to get to your stocks, too, and if you want, put your symbols in the chat. Go right here where I'm putting hello here. Hello. There you go. 6E. I don't know what that means. Sam put in 6E. I'm not sure what that means. Bond yields, again, we talked about this, a remarkable flight to safety and where it moved. 10-year from 1.75, 1.7, excuse me, to 1.45 in days. And again, all this is about, we're seeing, I got you. I thought it was something else. Sorry. Euro futures. Yeah. CL light tree crude. Yeah, we'll talk about that if you want. We'll put that on the chart. Follow up on 2 weeks ago. We talked about being on the precipice. We talked about this. We have this in the notes, time-stamped 2 weeks ago. You can listen to it on YouTube, on our YouTube channel over there on TriggerCharts YouTube channel, or on the website, of course, at TriggerCharts.com, and look at the discussion. The word on the precipice was there, talking about markets looking kind of vulnerable. This is a cut and paste right here, 2 weeks ago. That's exactly what we wrote 2 weeks ago. And there was a warning going on from a big, broad nature. Now, the reason why we discuss all the things we talk about very quickly in 30 minutes on a Friday call is this, that yes, charts are the overwhelming deciding factor as to the bias and directionality, trend, resistance, and support levels that we need to look at. However, some of the backdrop is kind of important to understand, so we kind of have a feeling of what's happening. And 2 weeks ago, we looked at it and said, things are not looking so great. There's a lot of things that are percolating under the surface that are causing me some angst, things that I've seen before. It doesn't mean it's permanent. It was just kind of like, things are just not smelling right. That doesn't mean you need to kind of blow out and go directionally a different direction or get crazy about it on a permanent nature, because things do cycle. Right now, we are still in a very strong liquidity cycle. The fact is, there's a lot of bullishness out there. People want to put their money away. We have a lot of people working. We saw the jobs number this morning, a 4.2% jobs number on an unemployment level. I think a little bit of a disappointment on the actual people that went back to work by a few 100,000. But still, the unemployment rate is really what's showing us that there is a significant amount of people that are back to work, and that means that those people can put money into their 401ks on a regular basis each and every week, each and every paycheck, and that all rolls right back into the market. We have the buybacks that are very strong. Interest rates, while they're talking about increasing interest rates, they're not doing it yet. It's not happening yet. So what's happening here is we are seeing a significant amount of one side, hey, saying, we got inflation, we got the problem with the virus, we got the end, we got this major variant with all these spike protein issues, and oh my God, and travel restrictions are coming on, and all this, back to work. Google said last night, hey, you know what? There's no requirement to come back to work for some time. All this comes into play with what is happening, why we're seeing this major push and pull on the markets. If we look just overnight at the Qs, and we see, waiting for data. Okay, there we go. I mean, we're talking about, this is a 30-minute chart. Let's kind of really move this. Let's move this into a 10-minute chart here for a second. And let's take off some of the things that we look at for investigation and research. Look at this move. This is, 6 o'clock in the morning. It was 15,919. This is about a 100-point move since the start of this morning. It's 16,051 right now. Spiked up to 16,120 for a minute after the jobs number came out. That's right on the jobs number, I bet. Yep, 840, 830. So the 840 bar is the 830 bar. So, what's happening right now is a lot of pushing and pulling. And one of the big things is the winners and losers. The market is all about rotation right now. We've seen it 100 times from Sunday. When something is kind of out of favor for a couple of weeks, they start popping it. Like energy goes out of favor for a few weeks. It comes back. It goes out of favor after they really pop the prices, et cetera, et cetera. Technology is starting to see some of the shine come off that beautiful exterior, and we're seeing some problems there. So when we're looking at what's happening right now, realize that there's a lot of, think about waves in the ocean. And, there's times when you're standing on the beach and you're kind of hip deep into the water pulls out, and a wave comes in, but then after the wave and it crashes down, even if it's small, it kind of crests and rolls over, and you get the white suds, and then all of a sudden it's just calm. And that's kind of what's going on with the markets. But what's happening differently is think about those waves, that as the waves come in, every second or third set is a different sector that's rotating. And what's happening is during those periods of calm, money is coming out of the areas that were really doing very well and got shot up, whether it's the, for example, the solar sector or the EV sector, or maybe even looking at the metaverse stocks. This is kind of part and parcel of what we're seeing right now, this constant moving, the tides that are coming in and out with regard to the markets right now. One of the big things that you have to really think about is the chart. The charts. The charts for some names are broken, and we're going to look at a couple of those this morning that are really problematic. We want to look for a rebuilding of a base again. We want to find where they can hold their support for a little bit of time, especially in a market that probably is on its back foot right now, on the defensive mode. But I would wait for some basing out. And a couple of them, I think we're going to look at Upstart today. Up nicely today, was up yesterday, but stock has been an absolute disaster free fall for some time. But you need to watch for those bases, whether it's on a daily or a weekly, 30-minute, 60-minute. Some stocks, what I like to do, and I'm going to show you two of those today also, is look for when those levels are going to start getting, shall I say, close to being breached, where there's nothing to the left. We always look from right to left. I've taught you that 100 times. And we look and say, okay, let's take a little quick, an arrow and just look right here, right to left. We look, okay, what's to the left? What's to the left? A lot of congestion in this area right here, but nothing from here all the way to here. So basically right now, what you saw was, and why this chart is showing what it did, this big move down, there was nothing really from there to there. Pretty much exactly within a couple of pennies of where the support was, double, right here and right here. So when we look at this and we start thinking about where we want to be and kind of what is happening with the markets, and more so what indications do we have? We want to look for this basing level. We want to see where it can kind of hold support for a while. Not a great level. Here, it's kind of holding support here. And when it breaks out, that's going to be something that to watch. This breakout, this move that we saw in the NASDAQ, right now we're seeing a little bit of a move. You would expect to see this move next into its level of resistance, and then see what's going to happen. As what happens with the markets usually is a significant amount of overall testing of levels. So we're going to look for the rebuilding of basis. Economics coming up this week. We saw, as I mentioned earlier, really good jobs number, which spiked the futures pretty nicely, holding up very nicely. Gold holding a little bit of a gain right there. Bitcoin down a little overnight. It's kind of sticking where it has been for last probably 12 hours or so. Next week, we're going to have the Consumer Credit Report, CPI, which will be interesting and important because it's the inflation report, consumer confidence, etc. I mentioned the online trading course or coaching course. Okay, let's get over here. Let's get to the numbers. Let's switch this back to 30, which is a time frame I like to look for research, and the daily. We're going to leave the aileron on today, which is a separate add-on. I encourage you to get this. I put this on all my charts. And the reason is I like to look at kind of different indicators, but they really line up. The momentum and trending indicator, the oscillating side of this, embedded in this aileron is probably a dozen plus different indicators. And we do a scoring and ranking and then bring up and let it learn from where it's been. And what happens is we get these kind of levels. Right now, we're looking at the Qs. The Qs on a daily basis clearly seeing significant amount of drawdown. I mean, just, this is kind of whole divergence that we saw when we saw this moving up. Now, what happens here is that again, was another significant situation to look at that we wanted to really focus in on that. Where are we? Well, if we kind of go here, kind of that level there, we see that in kind of, if we could even take a straight line and draw it right about there, landed on 15,755 a few times. That's going to be a good support level. I would leave that on my chart if I had a chart up. You can see we hit and connected a couple different points going from right to left. Even probably take it right in between those. 15,740 or so. Let's see what the low here was. Low. Oops, move the one. There we go. Low was 15,762. So within a hair of those levels right there. This level here was 16. Excuse me. We want to do the low one. 16,777. So yeah, 15,763. So that's right in the line of where you want to be. Taking a look at some of these other names that are on here. Upstart up 6.5%. Look at this chart yesterday, but look at this chart overall. Stock hit about $400 as the excitement over this lender and the AI and the automation and got crazy. We started looking at this saying, you know what, this is all weakening. Look at all this aileron. We would have kind of been right over here, said it's weakening. Held very nicely. But when you start looking from right to left, something I'm going to drill into every single time. There's really nothing when we look over here. Not a lot of congestion. A little bit of congestion right here, maybe. Some support right here. Once you broke through this level, though, right here, all over. All over. So, that was a continuation. Right now, we're still showing a short position. Probably going to be called out today. Other thing that you notice is that, yeah, the aileron has been absolutely sloppy and disgusting. Yesterday, where was it yesterday? It opened, not yesterday, I want to see where this broke. Right, let's go here. 207, trading at 187. Still has some work to do to get back to anything reasonable here. MTTR, we talked about this. Just off its high, did a nice little move up to about 35, but that was a quick flush higher. Let's call it 33. Currently trading about 29.10. One of the metaverse plays, but been stepping up. I don't know if you can see this, and let's see if I can maybe do this. It's kind of step up, kind of consolidating right here, then a breakout, another step, and kind of looking at this as steps. Now, one of the things I want to show you here, look closely. I'm going to draw some lines. I'm just going to draw lines. I'm going to draw lines kind of in the middle of each of our ranges, okay? From the red to the green, these are considered the major ranges within a swing pattern, okay? So, let me give you a second. Well, we'll leave that one there. So I'm just going to kind of draw lines in between each of these, kind of on these blue lines. You notice the pattern, what we're seeing here? Kind of an upward move, right? An upward move. And that means that we are in an uptrend on this, and that makes sense because we can see it right in front of our eyes. Always look at where the altimeters are and where they're playing. If it's kind of continuing moving up, the better side is to be on the long side. Quick question. Samuel asks, hey, does the software provide pre- and post-market data? Yes. You can go here and go to time frame, sessions, and we can say, excuse me, you got to do it on a minute. There's no pre-market in the dailies. So you can go over here in sessions and say, hey, pre- and post-market, 24/7, 24-hour, just post-market, just pre. I like to use the major market hours because there's a lot better volume that comes in. DocuSign down 33.5% this morning. We're not going to be able to capture this on the chart because look, the chart goes to 210 on the daily. So, we got to kind of look back to where that is. So let's just draw in a line of where it is right now. 155, what did I say? 155, well, 156 we'll call it, okay? 156 is right about here, right? What is that? What is that price? Where is that? I see nothing. I see nothing. You'd ask me, where would this stock go? I mean, first of all, I'm surprised it's gone so far. I'm surprised it really buckled underneath the 184 level. There is some decent support there, but it's not. Just blew right through it. Where's the support? I got to be honest with you, 93. But let's not get crazy with it. 131 is still a ways away. I don't know. I mean, you have something you could talk about here in the 150 range. I'll leave that on there. This is after some earnings, and the outlook was just terrible, so we'll just leave that there. WIN, WYNN. COVID, dropping off again. This is just not a good chart. Does anybody see this as a good chart? Is there anything here that has a redeeming characteristic of anything right now? You got some air back here. You're below your levels. You had a nice short call right about 90. You're going to get out of here about, where is it today? 82 is where the call is going to be to get out of it. I don't see anything good coming from 135 down to 82. CRM also had a big day on the downside. Nice recovery yesterday. Where does this level go to? I mean, you can look and see and poke around. You got kind of here, 247. That looks like a decent number that I would be looking for if this downtrend continues. DWAC, this is a Digital Work Acquisition Corp, a SPAC, supposedly going to house the Trump True Media empire. There was some news yesterday. It spiked it up overnight, came back in, trading down. Nothing good about this here, in my opinion. But what I want to show you, I did want to show you something. I'm going to change this to a 10-minute here. All right. I want to see if I can grab a couple things here. One of the things I like to look at, and where are we trading now? 46. Okay. So trading right down to the bottom here, 46 and change. One of the things I like to look at is this consolidation point, this great big box. You know, if you have the opportunity on a 10-minute base to get above 47, I would think this thing could squirt to 52. But if you go back and look at like even more of a 30-minute chart here, anytime you get above a certain area, you know, once you get above here, it kind of squirts when there's holes. You know, you have probably up to about $60 in this stock. If you do eventually breach this 53 and change. If you want to play the inside, is interesting, but I'll show you something else here that I think we can probably look at. Same looking chart. You know, once you get above any resistance, these things squeeze and have a massive short squeeze. This chart was $96 cents forever. Popped up to about 22 in a day and a half. That was when I was in Egypt, actually. You know, this one, you know, you're holding a nice base here. All kidding aside, let me see if I can do this. Yeah, so look at this. You know, anytime you're above the level of about 322, it's interesting. There's a 10-minute chart here. So we got that big push yesterday. Now we're trading within a range. It's not as easy to see it right now. I mean, anytime you see this and you start moving over any kind of resistance on these small, very illiquid and I would say player stocks, it's kind of interesting. Let me just kind of buzz through a couple of things. We have Roblox. I told you I like that one, holding its support right about there. We'll see how that plays out. Ethereum starting to break out very nicely. I didn't like that, the stock. Bitcoin holding very nicely. That 56,217. Right, that line we drew in some time ago is holding very nicely. Not a bad entry point for Bitcoin right now. GC just trailing down a little bit. We had somebody with eBay. Let me load these up. I'm going to play the currency. Somebody asked about the euro currency. We're going to look at this right now. And, you know, this has been a free fall for some time, the currency. This is the raw currency. It's kind of not looking good all the way back to June, to be honest with you. So, you know, U.S. dollar is very strong in this pairing. What you look at is whatever is first is what is valued in. So, you know, sometimes you have the opposite. USD JPY is the opposite. So this is the US dollar coming up, where we had the last, right? The last we had was what do we have? EUR/USD. This is the euro. The euro is first of this. So the euros. This means the dollar is strengthening, euro is weakening. I don't see anything here. I see some decent basic at 120, 113. You get above this 113 and change number, then let's talk. Let's talk about it then. eBay, somebody asked me about eBay. Get another chart just looking really droopy. Just really droopy. Just short right now on the system. I would say that you probably have down. I would kind of look at this. Let's put this in here. So if somebody asked me about this again. 64.17 is what I'd be looking at on this. Let's see here. Somebody mentioned CSV. Yeah, looks good. It's a good looking chart. Aileron's in the right spot. Daily chart looks good. Breaking out yesterday. No problem with that. Looks like a nice slow winner there. Somebody asked about crude, right? Yeah. It's up a bunch. This is going to be volatile. I don't think this right now, you know, basing out right there. Interesting. Yeah, I think you have a kind of a base probably in the, you know, right about the 60s, 60, 62. I would say it's a decent base right there. I just don't trust OPEC right there. I just don't trust OPEC. I just don't. I had somebody else that asked me something. Ulta up 5%. Had a good earnings report. I believe last night. I think it was last night. If that's one of the ones that's in the mix. Came right to kind of where its support is. A decent support in this. You know, there's a really nice consolidation that's going on here. What you could do is you can look at. By just drawing a box, you got kind of a couple different consolidations here and here, up to that red line. Not getting exactly. There we go. So it did a nice consolidation there, and now ready to pop back up. Kind of interesting. Somebody's asking about MJ real quickly. Hey, pick some of the individual stocks. I think you'll do better. So last one, STEM. It's just not looking good. It didn't look good last week. It hasn't looked good this week. I can't see anything there. Anyway, listen, we'll be back next week. Have a great day of trading. Let me know how you do. See you again soon.